Good afternoon, everyone, and happy Friday. Hope you all are doing well. Had a nice week. Looking forward to the weekend. I wanted to make this video today to talk about Palantir. All right. So before I get started, I just want you guys to understand this is not financial advice. Yes, I am short Palantir. I will be discussing that. I just want to be straightforward. I'm very transparent with my trades. So yes, I am short Palantir. My average is in the 142, so very close to where we're trading right now. And in this video, I'm not trying to spook anyone out of long term. I'm not saying Palantir is going to go out of business, okay? I just want to I want everyone to see the fundamental valuation of Palantir compared to other stocks and other IPOs that have responded similarly, that have shown big IPO rallies in the past and have grown into very profitable companies. But right now, we need to look at current valuations, future expectations, and is this stock trading at a reasonable price at 143 per share? My opinion is no, okay? But again, this is not financial advice. I just want to show you guys the breakdown of why I'm thinking the way that I'm thinking, okay? So Palantir, since IPO, right? We IPO'd at around 10 and it's now at 143. So it's gone up 1,400% since IPO. That has nothing to do with why I'm short. Sure, on a technical standpoint, you could say, okay, there's a RSI bearish divergence. You could look at the monthly and say, wow, look at all these green candles in a row. Look at that RSI at 95. Okay, that's all fun and games. You have to look at more than that though. And that's why I want to dive into the fundamentals today and compare Palantir to all of these other industry giants and how they performed in the past as well, okay? So let's look at Palantir first. So Palantir is currently trading at a market cap of 338 billion. It IPO'd with a 4 billion market cap back in 2020. Okay, since then it has gone up considerably. We have to look at their revenue as well. So they have gone from making $1 billion in 2019 to 3 billion last year. Okay, so they are making some revenue and earnings. All right, so they were losing money 19, 21, 20. Okay, they didn't start making money until 2022, right? This is when they actually started turning a profit. And this past year, they made 0.6 billion in net profit and net income. Okay, that's earnings. Price to earnings ratio, I'm not going to focus as much on this because there's a lot of, it can be skewed. Okay, it can be skewed based on one quarter. Okay, obviously I like to look at long-term price to earnings, but in this scenario, sure, we can say Palantir is trading at 600 times earnings. Yeah, that's a very big number, but I have seen numbers like that before on Amazon and other big tech IPOs, okay? So we can't just look at that and say, all right, I got a short Palantir because it's trading at 600 times earnings. We have to consider every factor, okay? Price to sales is actually a bit more of an accurate representation in my opinion, because it's not as skewed based on one quarter, right? This is going to show you the price, which is the market cap, compared to the price of the stock, right? Market cap compared to price of the stock compared to their sales, right? So compared to revenue, right? So the price to sales ratio on Palantir right now is 108, right? 108, that's a very big price to sales, but again, we can compare that to other peers in the industry, okay? So what I've been doing a lot of research on Palantir and a lot of other companies. Palantir is now ranked the 29th most valuable company in the United States, right? So if we go to the United States and we look at our biggest company list, right? This is going to show you all of the biggest stocks based on market cap in the US. Now, I like to compare to Palantir. So I went in, I looked at the books, and I compared each one of these stocks to Palantir. So let's look at Nvidia. Nvidia market cap, right? They IPO'd with less than $1 billion market cap, $500 million market cap in 1999, and now it is at a 4 trillion market cap, okay? So when did Nvidia have the same market cap as Palantir? It was around here, 2020. So Nvidia hit a 300 billion market cap in 2020, all right? And at that time, 2020, Nvidia was already doing 26.91 billion in revenue, and their earnings 2020 was 10 billion. So they were already making 10 billion in net profit, and they were making 26 billion in revenue at the same market cap that Palantir is currently at, that it's currently trading at. Okay, price to sales ratio. The highest price to sales ratio that we've seen on Nvidia is 35, and that was in July of 2023. So even a growth giant like Nvidia still has never had a price to sales ratio as high, nearly as high as Palantir. Okay, price to earnings ratio. Again, I don't want to look at this metric too much because it can vary. You see all these crazy variations based on 1 quarter of earnings, right? This is just 1 quarter. Okay. But it looks like their max price to earnings ratio was 149 in April of 2023. Okay, I want to focus more on this one today though. So that's Nvidia, right? Now Nvidia, again, we can look at their stock. So they hit 800 billion in 2021 in market cap, but by that time they were already doing so much, and they were doing so much in revenue, right? It doesn't even compare to Palantir's revenue, which is, I just showed you guys, it's 3 billion. Okay, let's look at other ones. Microsoft, right? Microsoft had actually a big IPO in 1996, and they quickly gained to a 600 billion market cap. This was at the top of the dot-com bubble. They had a $600 billion market cap before it sold off half of its value all the way back to a 230 billion market cap at the bottom of the dot-com bubble. Okay, but again, we have to look at what was Microsoft's market cap compared to their revenue and earnings. So revenue in 2000 was 23 billion. That's 1999 was 23 billion. 2000 was 26 billion. Okay, 26.7 billion. And their earnings at that time, they were already making 13 billion in 1998 in net profit, 15 billion in 99, and 9 billion in 2000. Right, so they were already making 20 times what Palantir is making right now, or more. Okay, and price to sales ratio looks like they had a high of 15.6 during the dot-com bubble, 2001. The highest price to sales ratio we saw from Microsoft was just over 15. Okay, so considerably lower. And this is just, look, I've done this with every single stock on this list. All right, you're not going to find a stock that's trading at the same market cap as Palantir, with the current revenue and earnings, and even projected revenue and earnings, right? So we look at Apple. Apple didn't hit a $300 billion market cap until 2011, right? And in 2011, Apple was already doing 164 billion in revenue, and their net profit was 55 billion, right? And at that point, they were trading at the same market cap as Palantir. Price to sales ratio, peak price to sales has been 9.76, tiny, very low price to sales ratio, and this is all the way back from 01. Okay, so it's just justifiable. You have to look at, is it just, are these companies trading at a justifiable market cap? Are they trading at a justifiable price to sales ratio? You have to look at the price of stock based on revenue and earnings, right? So you can go through the entire list and you're going to see the same thing that I'm seeing. You're going to see that many of these stocks started and they got up, right? Even Meta, right? Meta got all the way up to $1 trillion market cap before it collapsed down to 240 billion market cap. So it literally lost more than half of its value in 2022. But we have to compare Meta, look at its revenue, right? They were already making 40 billion by 2016 in revenue, 70 billion, 85, 120 billion, okay? And earnings, right? They were already doing 20 billion in net profit at that time, okay? Price to sales ratio, the peak price to sales on Meta was 18, okay? Now, a lot of people, I can go through this entire list, right? A lot of people are comparing Palantir to Oracle, right? Wedbush, if you look at this, you go back through the news sector, whatever. Here you go. Wedbush adjusts price target to 160 from 140, maintains outperform rating. So Wedbush says, oh, you know, discounting it, it's going to be the next Oracle. Let's take a look at Oracle. Oracle's a fun one to compare it to because a lot of people say, oh, it's going to be the next Oracle, right? Because it's enterprise software, it's database, it's cloud solutions, hardware, similar sector, right? Similar sector, it's tech. So Oracle started at a near valuation of Palantir when it first IPO'd. It got up to a 254 billion market cap, okay? So a little bit less than where Palantir is trading right now as far as market cap. And then from 2000, this is the top of the dot-com bubble, it took them 20 years to get back to a 300 billion market cap. And let's take a look at their revenue and earnings compared to Palantir. Right, so this is at the top of the bubble, 254 billion in market cap. Let's look at their revenue at that time. Oracle was already doing 10 billion in annual revenue in 1999 and 2000. Okay, so that's already 3 times higher revenue than Palantir currently has, and Palantir is trading at a larger market cap and a larger price to sales ratio, price to earnings ratio. If we look at their earnings, all right, they were already doing 4 billion in net profit in 1999 and 2000. And now Oracle has 17 billion in net profit, right? Their revenue has grown extremely, making 57 billion last year, and they're still only at a $650 billion market cap, okay? So this is what I've been doing, and I've been comparing Palantir. I've compared it to every stock in history, right? Now you can say, oh, I know some other stocks that have had crazy IPO rallies. Let's look at BLit Bio. This is one that's had a crazy IPO rally. I've backtested. I've gone back. I looked at all of the previous IPO rallies. This one did a 730% return, right? But then we go and look at their financials. Market cap is 2 billion. That's a joke, right? I can easily move a stock with a $500 million market cap to a $2 billion market cap and an 800% return, okay? And these guys, it looks like it doesn't have the data. Well, they're losing money anyway. But that's just, they're ranking BLit as the 4,509th most valuable company on the market, okay? And it also made a crazy rally, same as Palantir. Now, I'm not saying Palantir is anywhere at the same level as BLit. BLit is trash, okay? But we can compare it with other stocks like Tesla. Tesla, it took them, when they were trading at Palantir's market cap, right, where is that, 2020, Tesla was already doing 30 billion, actually more, 2020, 53 billion in revenue. And earnings was in 2020 6.7 billion. So they didn't even have crazy earnings. Price to sales looks like the highest on Tesla is 21. All right, so yeah, pretty low compared to Palantir on the price to sales ratio. Right, so that's all I've been doing. I've been going back and I've been looking at. I've been comparing. Right, I'm comparing. Oracle is the one that I looked at the most. I compared Oracle because it's very similar. A lot of people are comparing it, saying Palantir is the next Oracle. Okay, well, Oracle, if we're just looking at Oracle, right, it took them so long to go from 10 billion in revenue to 50 billion in revenue, right? It took them from 2000 to 2025. It took them 25 years. And even then, Oracle still had a major correction in 2000 because it was just too far, too fast, and it got crushed. Now, like I said, I don't think Palantir is going to zero. I really don't. But this is a very, very possible and probable scenario for Palantir. We saw Oracle. It did a 1,200% rally, very similar to Palantir. But before it went higher, it got corrected 85%, all the way back to the previous level. Okay. Now, why is that? Because companies have to justify long-term earnings. Short-term growth means nothing. Okay, you want to look at something that had short-term growth? Zoom. Zoom had short-term, look at this. Zoom had short-term growth, right, during COVID. The stock got rocketed. It went up 850%, okay? But now it's come all the way back down to IPO price because it can't justify being up here, right? It can't justify. Let's look at Zoom. That's a recent one, right? That's a recent IPO. So again, they had a pretty big market cap at IPO. They reached a max. This is their peak market cap, 158 billion. So still less than half of Palantir. Their revenue, 4 billion. So they're actually making more than Palantir currently. That could change, obviously, and then they're making about $1 billion in net profit as well. So actually more than Palantir. From a fundamental standpoint, this actually was performing better, Zoom, right? And it still came crashing down all the way back to IPO price. Okay. Now, I'm not saying Palantir will do the same. I'm not saying that Palantir will crash and stay flat like this for 3 years. But I am saying that I think Palantir is going to have a considerable drop back to retest levels, back to 40. It could come all the way back to 40, right? 40 was that previous IPO rally high, okay? It's very possible that Palantir comes back to 40, right? If you look at Oracle, it did the exact same move, and Oracle is making way more money than Palantir, okay? Look at Netflix. Netflix is just now hitting a $500 billion market cap. They're at 500 billion. When Netflix tapped a 300 billion market cap, this is the same market cap as Palantir. Netflix hit 300 billion in 2021, and from the 300 billion, it went all the way back to 88 billion. All right, let's take a look at their revenue. At that time, they were already doing 31 billion in revenue, okay, in 2021, and they were also doing 6 billion in net profit. Palantir is nowhere close to that. Price to sales ratio 10, 12, all right? Let me just remind you, go back to Palantir. Price to sales ratio 108. 108 is their current price to sales ratio, okay? Earnings, they're making $500 million. Revenue, they're making $3 billion last year, okay? With an unjustifiable market cap, in my opinion, of 338 billion, okay? It's just, it's too far, too fast. They're ranking it the 29th most valuable company on very weak numbers so far. These numbers could change, okay? But we have to consider, how have other stocks reacted in the past, right? How is Nvidia reacting when it first exploded, right? It first exploded, they were making crazy revenue, but then it corrected 50% before seeing higher, right? And Nvidia, mind you, Nvidia IPO'd at a very tiny market cap. Nvidia IPO'd at a tiny market cap, and it took them 15 years to prove their profitability, right? 15 years to prove their profitability. Look at their revenue, okay? Their revenue went from $500 million in 1998 to 10 billion, in 2016. So that took them 16 years to grow at that rate. That doesn't always happen. Some companies grow faster, but again, is it justifiable? Is their current market cap, does it match with their revenue and earnings? Does their price to sales ratio match, right? Is it justifying that large of a market cap this soon? It's not. It's just not, okay? So you go through, you can look at any one of these names, any single one, see how they performed. Let's see, I don't know. What do we already looked at this. Did we look at Broadcom? Let's see, Visa, I don't know. Let's just look at Visa. Visa has slowly grown and slowly grown. You don't see any, crazy when they hit 400 billion. It started struggling, 400 billion market cap, but look at their revenue. Visa, you just can't even compare it to Palantir. When Visa hit a 350 billion market cap, which was in 2019, Visa was already doing 21 billion in revenue. And earnings, they're already doing, was it 2019? 13 billion in net profit. 2020, 17 billion in net profit. Price to sales, max 22.7. Just look at that. I mean, look at every single one of these companies. Eli Lilly, price to sales, max, peak price to sales, 20.9, right? And again, Eli Lilly makes absolute cash compared to Palantir, and they're still only trading at a $700 billion market cap. Okay, so I hope that makes sense. This is why I'm short Palantir. And I'm not saying it's going to zero. I'm not saying it could not go higher. It could go higher, right? But from a 1 year, 2 year perspective, I think that there's a higher chance of Palantir making a 50% drop than making a 30% rally. Like I think that Palantir will see 50 before it sees 200. Okay, so that's why I'm short. I'm short on fundamentals, technicals. If we want to get into that, we can. There's bearish divergence on the RSI. That's a factor. Okay, it's not. I don't trade usually based on that, but we have also this RSI at 95. So it's one of the most extreme RSIs you can find on the market. All right, when we get those extreme RSIs, usually there's a correction. All right, but I've done my research. I've looked back. I've compared it. I've compared it to tech giants. I've compared it to Nvidia, Microsoft, Apple, Amazon. You can do the exact same thing as me. Go back, look at when Apple started trading at that market cap, right? When did Apple have a 350 billion market cap? Okay, and compare Apple's revenue at that same price, Apple's revenue, earnings, and price to sales ratio, okay, to Palantir. That's all you have to do. Compare each one, and you'll see why Palantir, from a fundamental and technical, I mean really from a technical standpoint too, is overvalued. Okay? Again, it's not financial advice. You don't have to short if you don't want to. Do whatever you want. I just wanted to give a breakdown as to why I believe, from my research, that Palantir is overdone, it's overvalued, and should see lower before it sees too much higher. All right? Thanks for joining. Have a good weekend, everyone.